Welcome back, and joining me for a closer look at what's played out on the market scene today is Imtiaz Suliman from Sentio Capital. Thank you so much for your time, Imtiaz. I can't really tell which direction markets are going in at the moment because the JSE is flat, European markets are mixed, and those US markets are still coming off of that long winning streak that we saw for 9 consecutive days. Anything stand out for you today in terms of where markets are going?
Yeah, thanks, Anaki. I think it was a bit of a tale of two halves. We started off weaker and then we sort of rallied towards the close. On the start of it and kicking off the day, we had some PMI numbers out of China, which were on the weaker side of market expectations. They're still above 50, which means that they're still expanding, although it was slightly weaker. And then we had the German election of the Chancellor. The first vote didn't pass, and they had to have another vote in the afternoon, and the new chancellor was elected. So I think there was a bit of concern around the coalition in Germany and that partnership in terms of the government stability, but nonetheless that seems to have gone through. And then overall, we had some comments out of the Treasury Secretary from the US talking about trade deals. Maybe we will get some trade deals announced this week, although the big one with China hasn't happened, and it seems like talks haven't even started on that end. So I think the market will wait for any news and developments around those tariffs and trade deals as the week progresses.
All right. Well, we've had a lot of news around Goldfields in the last few days. So let's actually start off with the quarterly operational update that they took out today. How are you reading those? Because I think from my assessment, it seemed that in Q1 of 2025, the metrics were better than Q1 2024, but seeming that they were a bit worse off than Q4 2024. What was your reading of those numbers?
Yeah, I think if you look at it from a year-on-year basis, it was a lower base in 2024 because they had quite a few weather-related issues with regards to excessive rain, etc. So on that basis, on a yearly basis, it was up 19%. But if you look at it, in terms of the bigger scheme of things, they produced around 550,000 ounces, and they're still guiding for their full year annual production of between 2.2 to 2.45 million ounces. So I think that's still in play, which is comforting. And then, it's all about the gold price. Gold has had a strong day. It was up almost 2% today, and the gold counters did well on the back of that. So at the current gold price of around $3,400, and if you look at the all-in sustaining cost for the likes of a Goldfields at $1,600 per ounce, they're making very healthy margins. And the balance sheet is also de-gearing quite significantly. And hence you're seeing some M&A activity with, Goldfields looking to make an acquisition as well.
And indeed, because we saw that with them wanting to fully control that JV that they have with Gold Road Resources there in Australia. But actually here in Africa, they were in talks with Anglo Gold Ashanti for a JV in Ghana, but seeming that they still kind of want to keep their projects and assets separate at that point. Talk to me about your assessment of that.
Yeah, I think the environment in Ghana is a bit different. So they were looking to get a mine extension, which they didn't get from the authorities there. And the current mine lease expires in 2027. So there's a lot of work for them to do on their end in terms of trying to get that lease renewed for a longer period. So I think whilst all of these other issues are on the go, they will focus on their own operations. Although there is merit of bringing Goldfields and Anglo Gold's operations together, getting better scale and throughput and lowering costs from that basis. But I think there's other issues that they will deal with first and then tackle the JV at a later stage.
Well, talking about issues, Renogen, actually, its subsidiary Tetra 4 had an issue with NERSA on regulation, but putting out an announcement that they have won the case in the High Court, but it was surprising that their share price actually plunged 8%. Did you take a look at what's happening here and maybe why the kind of divergence between the good news and the share price plunging?
Yeah, it's not one that I look at quite closely, but I think from Renogen's side, it looks like, the court case has ruled in their favor. So the gas that they produce from that operation doesn't fall under NERSA's jurisdiction. It's not part of the pipe gas sort of consortium. So from that perspective, they're exempt from that. So in terms of the reaction today, it seems it might be the good news was maybe expected and there was a bit of profit taking. But,
all right. Well, before we get to your stock pick quickly, let's go to MTN Rwanda because they came out with their quarterly numbers. Of course, we know that all those geographic divisions have been coming out with numbers and seeming like good numbers on Rwanda's side. Are they firing on all cylinders here?
Yeah, I think if you look at it overall, they grew service revenue by 12%. And if you break that down further, data revenue also grew by 12%, although they did lose some data subscribers. And I think that's on the back of some competitive pressures. But if you look at it from the mobile money side, that's the fintech side, that's growing quite nicely. So overall, it's still a play on data, increased data and penetration. It's small in the overall MTN group. I think it makes up about 2.3% of the MTN group's value. But nonetheless, it shows that it's moving in the right direction with regards to some of the revenue drivers in that country.
All right. Well, let's quickly get to your stock pick for today. Imtiaz, what are you choosing?
Yeah, so I'm going with Pepco, but I really want to focus on the other divisions outside of the core clothing general merchandise division of Pepco. So, Pepco has Pep and Ackermans, which are the big clothing businesses within the stable, and that's very value oriented. They do well throughout different cycles and have a very loyal customer base. But the other two divisions that I want to focus on is really the fintech side, which is the credit book. They've got a credit book that has been expanding quite nicely, and they're increasingly participating in that credit space. So I think if you look at the overall profile in terms of bad debt, still very healthy in terms of the bad debt ratios, and they have much more room to grow their credit book. Secondly, they've got the cellular business, and whereby they offer cellular phones in terms of a rental facility, whereby the consumer can essentially have their number for life. So that brings in a bit of stickiness to the consumer. And that's also growing nicely. And then the other business is the Flash business. I think Flash is the devices and the points of sale devices that they have throughout various merchants in the country. And they increasingly adding products to this Flash device to sell to the end consumer. And again, very strong growth. So I think if you put that all together, a good clothing business, but the fintech side of Pep is really what excites me and I think is the value in the business.
All right. Well, thank you so much for that insight, Imtiaz. Really appreciate your time. That was Imtiaz Suliman from Sentio Capital.